Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the gold market. So as you can see, yes, the market has shown great upward performance, at least on the intraday charts, and currently I would say that gold stands at the edge of the bullish and bearish sentiment on the daily and intraday charts, because we're just not occasionally talked about the taking long position around 1770 area, because we said although we exceptionally like the 1635 level, it's really great for position taking and so on, but we are not sure that gold market definitely will hit it. That's why we have on the table really big stakes on the possible upward continuation in the gold market. We would recommend to split the position. It's the same story as in the Great British Pound that we discussed yesterday. It would be better to split the position, take the 30% around 1670. Because you do not know what will happen. The market will drop 1635. That's great. You will take another 70% there, and your average position will be around 1645 somewhere. So this will be good entry point. But if you will miss the entry in the current circumstances, you will be off the board, and market will just continue upward action. But currently, at least, you will have the 30% of your normal trading position. So, because as you can see here, we see the signs of the dynamic pressure. Market is forming high and lows. It's upward acceleration while the trend stands bearish. In a way of the breakout of this level, starting upward action, that tells you that we're going higher. I don't know how far we will go, but I would suggest that it will be probably additional $20. 1770 is the next butterfly target. This is 127. 1770 is the next extension. We talked about it. Here as it stands, 127 extension. This will be nearest target. Who knows? Maybe market will accelerate right to the 1618, 1850, 1860. It's also possible. We do not know. But still, chance exists that market could show another leg down here, as we hope for it. And currently, today, we need to keep a close eye on what will happen around this area. Why? Because take a look. Market actually stands at the, as I said, at the edge. So either will start dropping to the 1635, or it will be fast upward breakout and upward continuation above the previous stops. This simultaneously the culmination point for the bears. So if you would like to try to take the scalp short position here, that's the point where you will get the minimal risk of your trade. It doesn't mean that it's a safe opportunity to take the short position. In current situation, it's no safe opportunity for taking the short position, because market shows really great bullish context. Well, but at least at that point you could place very tight stop, and if you get lucky and market indeed will start dropping, well, this point will give you the best risk reward ratio. That's actually why I'm calling this a culmination points. They will not increase, they doesn't increase the safety, but it provides best risk reward combination. So that's the points where you could place minimal nearest stop order. That's why I call it as a culmination. Also because that's actually culmination point usually coincides with the levels that split bullish and bearish context on the short-term charts. So moving above this area will turn the context to the bullish. While start dropping, it will keep the short-term bearish context on this ABCD pattern. That's why this point is very important. Here's what we could consider. On the hourly chart, take a look what we have. Here we have a bit different performance. So yesterday we saw probably it could be head and shoulders, but you can see down from the necklines was very mild, very small mild retracement, and market just continue upward action. Now we could consider this A, B, C bottom XOP target. It probably could be hit, maybe minor butterfly will be formed or something of that sort. But anyway, here as you could consider taking the short position, as I said, scalp traders, with the stops above the XOP. So it's very close to the current price action. It's also, you can see 1714 fib level, and take a look. It's 127 extension of this whole downward action. So it's kind of the butterfly also could be suggested here, although it's not quite a butterfly. Anyway, that's also additional resistance of the 127 extension. So we don't have the head and shoulders, but as a result, we have a period at the same level as was suggested by the head and shoulders. So just instead of the ABC pattern, we've got the straight upward forward action right to this level. So that's our view on the gold. If you would like to take the long position, currently you just need to wait. If you have missed opportunities to go long around 1670, 1675 as was suggested, here you just can't do anything. You need to wait and see whether this downward action will start or not. If you would like to take the short, well, you could try with the stops above the XOP, but you have to know that the overall bearish context is really fragile, because overall upward performance is great. Market stands in the fast thrusting action on the weekly chart. Well, here is very good combination from the risk-reward ratio, but taking the short position is not safe, and well, it's different result you could get. Think twice before taking the position here. But now for the bulls, we have no choice but just wait for a possible scenario on the daily or wait to 74-hour time frame chart with this possible ABCD. That's what we'll keep an eye on.